Right. Okay, Samit, stay with us. Lots more to talk about. We're going to take a while to come back to you. We've got Sandeep Tandon as well waiting by. But I want to address Lupin earnings. And we've got Vinita Gupta, the CEO at Lupin, US and Overseas Business Operations, Nilesh D. Gupta, Managing Director, India, and Ramesh Swaminathan, the ED and Global CFO, Head of API, Sustainability and IT, also joining in on the show right now. All three of you, thank you so much for your time. Nilesh, if I could start off with you first. Your India business sales were up 8% annually. When can we see the growth number in double digits, and what factors here are at play?
So we basically grew at market growth rate. So the market is growing around the similar rate of 8.6%, and we're running the same. Actually, we've seen very nice volume growth as a constituent of this growth. Almost 5% of this growth comes from volume growth, which is very heartening. If you see the core therapy areas, we're actually really doing well. So cardio growing at 17%, respi at 18%, diabetes actually at 19%. So if you see without the LOEs, without the trade generics, we're actually growing 1.4 times market. So if the market continues at this rate, so obviously in the second half, we should get to double-digit numbers, which is our plan. So our intent is to grow 20-30% ahead of the market. And it sounds like we're headed there. So quite hopeful of Q2 and H2. We should get there. India is important, of course. We have more than 10,000 representatives. It's our home market, so obviously important that we do well and well ahead of the market as well. So, hopefully second half.
Okay, thanks for that. Nilesh and Vinita, hi morning. Give us some color on how the US business is shaping up for the company. How are you seeing the impact of the tariff? And in your opinion, do you believe this 250% tariff that Trump is threatening could be likely? If so, will you be shifting production if there is a need to do so?
So we have yet to see what the impact is going to be. I mean, on pharmaceuticals, we're waiting for the outcome of the investigations on 232, and based on that tariff that is rolled out, and as part of the mitigating strategies, we certainly are looking at potentially transferring products into a New Jersey facility as well as a Coral Springs facility where we can, where it makes sense. But otherwise, looking at potentially offsetting some of the cost increase where we can. And, where there are margin pressures, obviously we'll have to make a hard decision.
All right, but Ramesh, let me come to you to have your take on the margins, because even the street was surprised with the kind of margins that you have posted. It has been a really strong show, but can we expect this strong growth to continue going ahead? This 27% plus margins, are they sustainable?
We've been continuously working on EBITDA margin expansion for the past several quarters, and this is actually a result of that. This is obviously because of top-line buoyancy that you see across several markets, but more particularly America, with the kind of products that we have launched. And obviously, the incessant focus on cost, has really paid off big time. So that's very gratifying. And you would see that this is actually despite an increase in R&D numbers in absolute terms and as a percentage of sales. This focus on both the top line as well as the middle lines in terms of cost will continue. So I would expect, in fact, margin expansion to take place. And if we were to knock off the impact of adjacencies, which are still evolving, our margins would have been would certainly have been a little higher. So clearly, we're guided for gradual margin expansion, and we're on to that path.
Okay, that's what the Lupin top brass has to say. They're also in wait and watch mode when it comes to pharma tariffs for sure. But thank you so much, all three of you, for taking the time and joining in. And we will revisit that conversation on Lupin earnings in just a bit. But let's look at the market setup. And what is it that investors